George Suri's mortgage broker here with the May 2023 finance update. This is for my clients and future clients. Let's get started. So what's happening in the market? One thing is that it's getting harder for people to get home loans. So clients are coming to me and saying, can you give me this much? I'm like, sorry, you can only get this much. And the biggest reason for that is because the interest rates continue to rise. So earlier on this month, the RBA put up the cash rate by 25 basis points. Most experts predicted that they would keep that on hold. And that's why I always tell my clients, do not take what the experts say as gospel truth. You know, they don't have a crystal ball, they're flying blind like the rest of us. Instead, you focus on your own situation, you stress test yourself. What happens if it goes up by 2%? Can I make repayments? How can I get myself prepared in case that happens? And speaking of stress tests, that's one of the reasons why it's so hard to get a loan at the moment. So you got the assessment rate, which is what the bank services you at. So that is the loan rate plus their stress test. So all up at the moment, the assessment rate for the banks is 9.44% for an owner-occupier loan. Now, that is really difficult for people to service that. Can you imagine servicing at 9.44%? That's what we're dealing with. So if you're a client, you come to me and say, why can't I get what I could have afforded a couple of years ago? That's why. During the pandemic, the assessment rate was around 5.25%, 5.5%. Now it's 9.44%. So at the same time as all of this, guess what's happening? The house prices are starting to increase again. Now a lot of people are like, what? That doesn't make sense. What? The house prices are increasing even though it's harder for people to get a loan. People can't borrow as much. How does that make sense? And there is an explanation for it all, and that is purely supply. There's not the supply there available for people to buy houses. I don't know if you go on realestate.com.au, I do a lot. And you go on now and compare it to what you saw a year ago, 2 years ago. You'll be surprised. There's just no stock on the market. No one wants to sell. The investors don't want to sell because they're getting such good rents. They're getting the highest rents they've ever had. Owner-occupiers don't want to sell if they don't have to because they're going to have to rent. And we're in the middle of a rental crisis. Now, we've also got obviously overseas immigration coming back in. They all want to find places to live. It's like a melting pot at the moment. It's really unprecedented times, but it's starting to push the property prices up even though the interest rates are rising. And at the same time as this, first home buyers are getting back into the market because it's a very logical thing, right? If you think of yourself as a first home buyer, a lot of my clients are first home buyers, their mindset is they get a letter in the mail and all of a sudden it says their rent is going up by $200 a week or $100 a week. There's a point where people think, look, I don't want to keep, facing these rental increases. Maybe I'm better off getting into the market. And not only that, there's also the threat of being homeless. There's a rental supply shortage at the moment. There's homelessness in Australia like I've never seen my entire life of living in Australia, born in Australia. I've never seen this. And it's probably going to get worse before it gets better. So a lot of first home buyers are like, what choice do we have? So you get in the market, even if the house prices were to suddenly drop, right? This is the worst case scenario for most first home buyers. The house prices drop by 50,000, 100,000. Well, guess what? Most first home buyers don't hold on to a house for a year or two. They normally hold on to it for 6, 7, 8, 9, 10 years. So imagine in 10 years' time, that 50,000 that has dropped in the short term, that's not going to be there in 10 years' time. In 10 years' time, they're going to have made money on that house. It's not a risk. The risk gets obliterated by time. What's a bigger risk here? The bigger risk is being homeless, not having a house for 2 years. That's a much bigger risk than worrying about what property prices do. And a lot of first home buyers are jumping back in the market for that reason. So on the rental crisis at the moment, so how come this is happening, right? Like pre-pandemic, everything was fine. Now all of a sudden, forget about inflation, immigration for a second, all of a sudden there's a problem. Now, the biggest reason for this is household size, right? So during the pandemic, you might remember, they had all these restrictions, all these rules. If one of your housemates got COVID, you had to basically isolate at home with them. You couldn't go to work, you couldn't earn money. during a lot of that period, a lot of the states, they were locked down. They couldn't even leave their house, except for half an hour a day or something like that. So what did that cause? It made people, they didn't want to live in share houses anymore, because even if their housemate got sick, okay, number one, there's a risk they'd get COVID, but number two, it meant that they couldn't go to work and earn a living. So they didn't want to share houses, so they moved off into their own units and things like that. Secondly, because people were stuck at home all the time, they weren't so happy with living in a small little unit with a tiny balcony. All of a sudden they wanted to get a bigger house or a bigger yard. And so basically this led to the household size getting smaller, which is what we still have here today. Now, with this rental crisis, the government is doing very little to help. They know that it's a dead situation. They can't really help them much. What they're banking on, this is my thoughts, thinking logically about it all, what they're banking on is that these household sizes increase again. That's the way out of this rental crisis. So people move back in with their parents. The share houses come back in a favor. So that's really what they're banking on here. That's the way out of the rental crisis. Okay, so unit prices are actually increasing faster than house prices. And same with the unit returns on the rentals. They're increasing. The rental prices are going up quicker than household rental prices. And again, it comes down to demand. A lot of people can't afford the houses anymore. They've been locked out of that. So what do? They lower their expectations and they buy a unit, right? It pushes up the demand for units. Also, we've got this overseas immigration at the moment. And a large percentage of them, or at least a decent percentage, are overseas students that are studying in Australia. Now, they're going to want to rent units. Generally, they don't know people in Australia. They're going to rent a unit by themselves. Or their parents, if they're cashed up, they might buy a unit for them, which is allowed. If there's a student there, they can come in and buy a unit for them. Overseas buyers. So that's basically, there's a lot of demand for units at the moment because it's the bottom end of the market. Finally, another thing that's happening at the moment is the RBA shake-up. So basically, they're going to transform the RBA. This is the proposal anyway. And there's some key things they're planning on changing. Number one is that they want to have more of a diverse board of people that decide on these interest rates. So instead of just the economists that they normally have, they're going to have representatives from different fields in there. And we don't know exactly what these different fields will be yet, but you can imagine there might be one for homelessness in there and the problem of that and what these interest rates do to that. There might be a developer in there or something, someone representing the developers and home building and how this, there might be a whole array of different, specializations all deciding on this. Now, the biggest problem I see with that is, let's face it, if you go see a real estate agent, they're going to want to sell your house. If you go see a financial planner, they're going to want to sell your shares, right? Imagine putting these people all in a room and they've all got competing interests and competing ideas on things, and you have to make a decision. Okay, financial planner, real estate agent, what's better, property or shares? You have to come to a conclusion here. Very, very difficult. Very difficult. So this is the problem with that. You might have too many cooks in the kitchen, all of different specialties. So we'll see what happens there. How does this affect you? It's not going to affect you that much. The biggest thing they're talking about, well, instead of 11 board meetings a year, they might drop it down to 8. Again, I don't think it's going to affect you that much. All it means is that your interest rates might rise or fall 8 times out of the year rather than the current 11. What that might do though, it might mean that, over these 8 times there might be bigger increases or falls than what they might do over a steady 11 months. The idea behind it, I get it. It's economic data comes out in spurts. So rather than trying to make a decision every single month when they don't have all the data before them, they're kind of guessing more. Let's get the data to them. Maybe if we cut it down 8 times, they'll have the data. Though I think that it's all going to come out in the wash. I don't think there's going to be much difference there. I don't think there's going to be much difference for borrowers or anything. So anyway, that's a wrap up. That is what's happening in the market. There's a little bit more going on as well, but I'm not going to take up all your day. If you want to have a chat to me, give me a call.